Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. First and foremost, a happy Canadian Thanksgiving holiday to all of our Canadian viewers, and best wishes to our American viewers for their own holiday weekend. I hope that you take the time to give thanks for living in this wonderful nation of ours and get to spend time with your loved ones. Second, I am slated to be back on BNN again this coming Tuesday, bright and early at 8:10, to talk about Canadian and U.S. banks in light of recent developments, as well as given that earnings season is getting underway. Make sure that you tune in. Okay, well, the past week has been fairly uneventful as far as most of the FANGs are concerned. A sort of steady-as-she-goes kinds of week, although Alphabet has now come under concerted attack for monopolistic practices with a threat of potential breakup. And today, the market has sent a rebuke to Elon Musk for his robocab efforts. So without further ado, let's take a close look at the FANGs for this week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, we'll start off with NVIDIA, which is just riding its HB7 price there. And of course, a lot of the slope of that line is due, I have to tell you, to the earnings forecasts that we are seeing. So that is kind of driving both the fair market value, which isn't actually moving all that strongly, but is definitely driving the slope of that stock higher. However, it still is unable to break away from that level, and I don't think that it will be unless the market as a whole can break out decisively. Microsoft just remains in a sort of a flattish kind of a trend, and I do have to say that if there is anything to this explosive growth story of AI coming down the road, we're not seeing it in Microsoft, nor are we seeing it in Amazon, which is just holding in at its bubble price, or for that matter, Alphabet either. Now, what I wanted to do today was just show you the very, very long-term trend of Alphabet, which, as I said, is under fire for its monopolistic prices. And you can see for a long time here, going back, as this goes all the way back to 2010, could have gone back further, but all the way back to 2010, it essentially just kind of rode its super growth price, as did the fair market value. With the advent of the COVID season 4 years ago, the expansion of online viewing and so on really kind of pushed up the online searches, and it drove up the earnings and the fair market value, and they never really kind of went back as actually I had sort of expected they might. It never really went back to its trend, and that may be, of course, part of the reason why the DOG Europe and a bunch of the states are down on this stock anyway. If we take a closer look here, there we can see that the stock hit its bubble price, 7.4 times book, came down, nice hit on its mid-super growth. By the way, a perfect buy opportunity. Was bouncing nicely, but now looks as if it's maybe rolling over a little bit. Question, if they break it up, is the sum of the parts greater than the whole? Thought for the day. Meta continues, by the way, to hit new highs this week, and looks very much to me as if it wants to go to its HB1 price, and should well be able to do that, particularly if the Nasdaq hits my upside target at its HB1. Apple just continues to flatline. I mean, look at this. If I lay my cursor here, you can see a perfect flat line, and neither breaking out nor breaking down, although it's now coming down to its HB6 price, which is 33 times book, and I will be curious to see whether it will be able to hold in here. But for now, despite the fact that there is very, very little growth in earnings and sales, it's just hanging in nicely. Tesla had gone up, hit its HB2 price, set back, and of course you know what happened today, off some 20 points there on the announcement of the RoboCab developments by, clearly I guess the market doesn't believe that this is going to be a major business feature going forward. Finally, taking a look at Netflix here, we can see it bumping up against its HB2 price, and that's 12 times book value. Actually today has set back again because it banged up against HB2 and simply wouldn't break out. I took a look at a longer term look at Netflix and noticed something kind of interesting here. You'll see, of course, that the stock is very, very close to breaking out to a new all-time high. Although not in terms of price, but not in terms of valuation. And if we take a look at the fair market value, the intrinsic value, okay, you'll see if I take that and go over here that today that intrinsic value is much higher than it was the last time the stock was this high. So maybe there is a possibility. Maybe there's a possibility of it breaking out. So we're hanging in hopes. But again, we're not going to spend our profits until we actually get them. So to briefly recap what happened in the past week, and more to the point, why. Off the top, NVIDIA is riding its HB7 price. That's 43 times book, and has not broken higher so far, despite the loud cheers from its CEO, Jensen Huang. Despite the absurd valuation of the stock, I suspect that he still wants to have the biggest market cap in the world. For sure, there has been strong estimated growth in its balance sheet, and therefore its structural pricing, due to very robust earnings forecasts. I am still from Missouri, however, as to the real business impact that AI will have on the economy. And I am far from alone. And to back that concern up, the SVA action of the three main AI platform stocks, Microsoft, Amazon, and Alphabet, continue to deny much hope for explosive growth in this field. The price and valuation action of Microsoft is very non-committal, and the shares remain right in the middle of two breakpoints. I would still treat it as a coin toss in the shorter term, which is a poor way to invest. Amazon is clinging to its bubble price at 7.4 times book, with huge potential downside fair market value measure risks. But so far, so good. If the NASDAQ reaches its HB1 market peak target, however, and the bubble price does not hold, then a sell will definitely be in order. Poor Alphabet is under attack from the Department of Justice, half the U.S. states, it seems, and much of Europe. It does not seem to pay to be too successful, it would seem. All this has halted the upwards progress of the shares after their perfect hit and rebound up off their mid-super growth price. That's 5.5 times book, where, as you will recall, I observed that we got a perfect SVA buy signal. Compared to most of the FANGs, the shares are reasonably valued. So I guess buyers should hang in for now. And who knows, as I said, if the company is broken up, maybe the sum of the parts could be greater than the whole. Meta's hitting new highs this week and definitely remains a hold. Certainly, if the NASDAQ reaches back to its HB1 price, that's 9.5 times book, then Meta could easily go the extra mile to its own HB1 price. I keep observing from the point of view of pure technical analysis, Apple would be a hold, with the hope that it can break out of its current flat trend. From an SVA point of view, I would watch that HB6 price. That's 33 times book, however. The overall market may well give us our marching orders for this stock, and I would wait to act. By the way, that means either way, sell or buy. Tesla rose up almost dead to its HB2 price, 12 times book, a key SVA breakpoint, and is now setting back. I had remained bull-headed and maintained a sell on the shares, as you will recall, and I'm glad that I did this week, as clearly I'm in the right camp. Finally, Netflix hit a new price high and is still trying to break out over its HB2 price, that's 12 times book, and head back to its all-time high, which is a couple of breakpoints higher. I keep saying, however, that the proof of the pudding will be a breakout, but I also suspect that the leadership of the NASDAQ will be crucial going forward. However, the HB2 price remains a stout barrier as today's setback continues to underline. Anyway, that's all for this week. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you maybe on Tuesday